Well, you know, sometimes in life you have regrets and you would have changed certain things around in your life, right? And you know, I look back at my life as in like the past few hours and I would have said to myself, before you wake up, Jeremy, do not look at your stock market portfolios because stocks are dropping and they're dropping fast. Oh my goodness, holy smokers, this ain't no joke. You gotta be flipping my flapjacks. Woo! That market is dropping fast, okay? Especially in regards to certain stocks out there. In this video here today, we're gonna look at the carnage that is going on out there, especially in regards to some of these big high-flying tech stocks. It got ugly today, okay? We're gonna talk about the ops, okay? And I don't mean the enemies, okay? I'm talking about the opportunities in the market. Certain opportunities that I'm looking at out there that are actually very, very attractive, okay? And are getting more attractive. And then we're gonna talk about some strange stuff. And I mean some really strange stuff that is going on in the stock market. Always smash. It is the most important thing in life, even more so than buying stocks. Always smash, okay? Alrighty guys, let's start getting into this. So first off, I looked at the NASDAQ today. It was down almost 2.5%. I looked at Tesla, my Tesla. It was down 8.55%, down $66.80 a share. And I said to myself, oh boy, I don't even know if I want to look at my accounts. It's gonna be a disaster. And then I did, okay? So then I went ahead and I looked at the public account and I say it actually wasn't as bad as I expected. I mean, we were only down $67,000 today. I was like, hey, man, okay, that's not so bad in the public account. I honestly thought it was going to be a six-figure down day today in the public account, just based upon when I saw that NASDAQ down 2.5%, when I saw Tesla, my Tesla down 8.55%. I was like, woo, but yeah, it wasn't as bad as I thought, but it was still ugly. Let's be very dang clear, okay? Some of the stocks that pulled down that account the most, Skyworks Solutions, which is an absolute beast in the 5G space. Okay, they have 8 chips in the new iPhone. Absolutely amazing. But that one got hammered today. And that's just one of those stocks, along with all the other semiconductor makers pretty much out there. If the NASDAQ gets hit hard, they all get hit hard. So that stock was down 4.29% today. That pulled us down $5,356. Tesla, my Tesla, was by far the worst stock in that account, right? That was down, pretty much it was down the biggest as far as a percent, but it was also down by far and away the most as far as money, right? We were down over $50,000 in regards to Tesla, my Tesla today, a big number, right? Tattooed Chef, it's crazy. Like even after that massive dip, we're still up 1,400%. That's just nuts, okay? Tattooed Chef down $7,000 in the public account here today. And Upwork down $3,778, which was also down quite a big percentage there, 8%. What you're gonna find a lot of times in the stock market is high-flying stocks that have been beasting. A lot of times when the market pulls back and has a pullback day, a pullback week, a pullback month, a correction, a crash, whatever you want to call it, a lot of times those stocks get hit the hardest, especially initially, because a lot of people FOMO'd into those positions because they saw them going up. And that could definitely be true with certain stocks like a Tesla and Upwork, that those stocks have been beasting. And a lot of people just, sold off. However, where things get really, really interesting is there were certain stocks in that account that were not only not down today, but were actually up. And we're actually up today on certain stocks, okay? For instance, Corsair Gaming, ticker symbol CRSR, right? A direct play on gaming. You would call it a tech company. And yet look at that stock. We are up 4.33% today. Up $3,464 today. Interesting, right? Look at the Planet today. The Planet has been high-flying stock, and no pun intended, okay? But the Planet has been a high-flying stock, and you would have thought, okay, that one pulls back big today. Nope. It was up over 3% today? That's crazy to think about that. When you're looking at the NASDAQ down 2.5%, when you're looking down at stocks like Tesla down 8.5%, I mean, you would just assume the Planet had to be down, and it was up 3%. So there was obviously a lot of buying pressure on a stock like that today. Interesting, right? Wynn Resorts up 2.5% today. How about that one, okay? Up $1,761 in that. So some of those positions actually pulled us through to, not as negative of a day as I thought. Very interesting. There are also some very interesting things I noticed in my private account, okay? And I'm talking about my main private account, which has a lot more money in that account than it does in the public account, right? And in the private account today, there was actually, that account was down less than the public count. That was very, very interesting. And it's positions like this one. It's a new MJ play I'm invested in. Only my private group knows about it right now, and I can't really share that one publicly, or that stock would just be, it just go up like ridiculous, okay? So I can't even share that one yet. It's like too early days for that one. But that position was another one of those that was up today. It was up 3.23% today, up over $5,200 on that stock here today, right? Peloton, my short position on Peloton. Oh my gosh, my only short I have in the entire stock market. It finally had a good day. What do you know, okay? Peloton had been a high-flying stock. I shorted it and I was like losing my tail. And then finally, holy Smokas, ain't no JOKAS. Finally, you know, it was a decent day in terms of that Peloton short. Don't short stocks at home, kids, okay? Bad idea. That's all I'm going to tell you about that, okay? Wynn Resorts, another position that's a pretty big one, obviously, in my main private account, and 190K, it was up today. Interesting. And then the Planet, I have the biggest position in my main private account, and that one was up $7,590 today. But that's not even where things get really epic. Things get really crazy when I look at my dividends only account, okay, where I only own dividend stocks. That account was not only not down today, it was up 2% today. What in the world? And by the way, that dividend account is doing so much better than I ever thought it would, okay? I started that in the private group probably about maybe a year and a half ago. And it was like, okay, let's build out a dividend account. Let's just see how it performs next to the public account. I always thought that account would do really bad. That account's up a silly whopping 115% and was up today, almost $4,000 up on a day when just people were getting wrecked in this market, including a lot of my accounts were getting wrecked. And that's where things just get crazy here. It's like, wait a minute, what type of market we're in? But when you look at this, okay, the NASDAQ, yes, it was a horrible day for the NASDAQ, down 2.5%, with countless tech stocks that are high flyers getting nailed. But then the Dow was up today. Up today. Isn't that, it almost looks like a rotation of money, doesn't it? A rotation of money out of super high growth stocks and into some of the more value plays, maybe even into some of the beaten down travel plays. Look at a Wynn Resorts today. Look at Royal Caribbean. Look at a lot of those stocks that have to do with travel. A lot of them, most of them actually, were up today, and a lot of them were up substantially. It almost looks like a rotation of money into more of those positions. Dividend stocks. If I recall, Walgreens wasn't down today. WBA, right? And so it's clear there's some sort of rotation of money going on. And this isn't the first day this has happened. That's what's interesting. This has been kind of a rotation that's kind of happened on the DL I've seen over the past month or so. And this is what is really, really interesting going on in the stock market right now. Because, and I feel like Tesla stock is the face of this rotation, right? And Tesla hit a high of, I think, $900 or so about a month ago, maybe a month and a half ago, sometime around then. And ever since then, money has been rotating out of Tesla, even though like people say they're buying Tesla, and you've heard different funds saying we're buying Tesla. Okay, there's clearly a lot more selling pressure on Tesla stock than there is buying pressure, because now you look at that stock and obviously it's much lower than it was literally just a few weeks ago. We're talking that stock closed today at $714, right? $714 versus a high a month and a half ago of $900. It's very, very clear that that is going on. That's where things are getting really interesting. Now, all these different asset classes are kind of interlinked nowadays, okay? Although people don't want to admit it, it is, okay? In time periods where the stock market's really strong, real estate's really strong, and cryptos are really strong. In time periods where those are weakening, they all weaken, okay? It's the way it goes. And Bitcoin is very, very interesting. Bitcoin briefly dropped to like 48,000 here today, okay? And it's bounced back since then, but it was a big, big fall from where it was at. And Bitcoin tanked 10% after Elon Musk said prices seem high. It's interesting to see kind of like a rotation, maybe even out of that recently, which, by the way, there's no such thing as Bitcoin is high or not high, okay? That's not the way it works. Like, Bitcoin doesn't have a P ratio or price to sales ratio on it or anything like that. There's no such thing. Like, all that matters is what's the next person willing to pay. That's literally all that matters. There's no such thing as the price is high for Bitcoin and the price is not high. That's just an invalid argument there across the board. But it's interesting, that pulled back, and then we see a ton of stocks pull back. Yardini Research, let's go over to them, okay? Let's talk about margin debt for a minute. Look at margin debt. My gosh, it's the highest it's ever been by far and away right now, okay? It's interesting because usually every time you have a huge uptick in margin debt, you usually have a big, big downdraft in the market, at least short term. It's not like it lasts necessarily years and years, although it could potentially, but that usually has to have something going on in the underlying economy. But usually when you see a huge spike in margin debt, you usually get a 5, 10, sometimes 15% correction in the stock market after a big run. And we've had a huge run up in margin debt recently, okay? So it makes you think, but this is kind of playing out, right? I mean, I know a lot of people that were margining a lot of money into Tesla, right? And you see that stock hit about 900, and since then it's just been pulling back, and here today it's at 714. Very interesting, okay? I always keep an eye on the margin debt because that just kind of shows you, like, especially as far as brokers go and retail investors, it just kind of shows you how much confidence there is in a market at the particular time. And if you want to track something really interesting, okay, the best time usually to go on margin debt is when margin debt is really, really low, okay? When margin debt's really, really low, that usually means it's a very good time to go on margin debt. Time periods where the margin debt's flying high and it like went up in a straight line, usually not the most attractive opportunity, unless there's something weird going on where you see some special opportunity in the market or something like that. But just as a general thing to remember, okay, time periods where margin debt's really low usually means it's a good time to actually maybe potentially go on margin, although I'm not the biggest fan of a lot of investors going on margin, especially if you're newer to the market. But just something to keep in mind. And then time periods when it's up in a straight line, unless you really have some crazy opportunity out there in the market, that's usually the times you're like, I think I'll stay away for right now, okay, in terms of actually going on margin, okay? Now keep in mind, in time periods of selling leads to more selling. And that means forced selling, or that means choice selling, which, by the way, forced selling could be you have a lot of margin, you get a margin call, and the next thing you know, you have to sell off some of your stocks because you got a margin call. Or maybe you have a stop loss on a stock and that stop loss gets triggered, and so your shares are sold, which puts more selling pressure on stocks, right? And which causes more people's stop losses to get triggered on stocks, which causes more selling, and more selling kind of breeds more selling. And that's why you can get such crazy sell-offs in the market sometimes, and things can happen so much faster. Like, people always ask, how come the market can drop so fast, or a stock can drop so fast, and then it takes much longer for the market to go up in a big fashion? Well, at the end of the day, fear sells better than buying, okay? Not nearly as many people have buy prices like, oh, if the stock goes up to a certain price, I'm gonna buy more shares. That's not the way it works. But selling, they do. They put stop losses on a stock, sell, and it causes more forced selling, and it causes other people to say, oh man, maybe the market's tapped out for right now. I'm gonna try to time this out and get out. I'm not the biggest fan of timing the market or trying to do things like that. It's a very hard thing to do. And when I say very hard, I mean almost near impossible thing to do as far as timing out the market. Believe me, I've tried many times in the past. I've seen many other people try. It is not a game to be played, okay? But the fact is, selling breeds more selling. Look at a stock like AMC today. AMC was up almost 15% today. This is what I'm talking about, where things are getting strange, okay? You got Tesla, basically just kind of just getting destroyed, okay? And you have AMC up 15%, and after hours it's up another 5+%. Jeez, okay, that's a big move there. I mean, I came out with that video, $5 going all in AMC, man. I should have went all in AMC, man. That stock's all of a sudden turned into a beast over the past, basically since the video came out. I'm like, holy Smokas, that ain't no JOKAS. But that's where things are getting real interesting in this market right now. You look at a stock like Tattooed Chef, okay, TTCF, big long-term opportunity. That stock has continued to sell off, and it is a big long-term opportunity in my opinion with the type of growth. Like, what I see in the real world right now is epic for Tattooed Chef. I go to Sam's Club, like my local Sam's Club here in Vegas now, and I'm seeing 7 different SKUs for Tattooed Chef, and all of them are selling well. And I mean very well. From everything I'm understanding about this, the sell-through is strong. So they're getting more SKUs, they're getting into more locations, and the sell-through is strong. That company has such a big long-term op in front. They aren't even in grocery stores yet. That's going to be something that plays out in the back half of this year and going into next year. This company's not even doing business internet. Like, oh my gosh, the long-term opportunity for Tattooed Chef, I don't even think people are conceptualizing how big it truly is. This is a company that can be a $10 billion+ company within the next 5 or 10 years, as long as they execute decently. If they execute as well as they have been doing, I think this could be a lot bigger company than that. Let's just put it that way over the next 5 or 10 years. And this is a type of huge long-term opportunities I love in this market. And that's just a deal that is being presented for somebody like myself to take advantage of out there. I look at a stock like Eli, which Eli is going to be taking over Topgolf at some point in 2021 officially, okay? And I was at Topgolf this weekend. It's just a booming business, whichever way you want to slice it, okay? The business is amazing. The business model is amazing. And Eli, you can make a very good argument that that stock is a deal and a half long term, not just based upon their golf club business and their golf ball business and that whole business that is very, very profitable. I'm talking about from the Topgolf side alone. The opportunity for that company is actually pretty darn immense. And yet that stock is, it's been selling off. It basically peaked around 32, and since then it's just been kind of selling off day after day after day. And, if you're at all interested in that, all I'm going to say is, look into it. Look into that stock and see if there's something there for yourself, because there might be, okay, as far as for long-term shareholders. Short-term, you never know, but I definitely like that as like a dollar cost average type stock where, I buy into it and it dips and I'll buy more, okay? Look at Tesla today. That company lost around $70 billion in market cap today. Around $70 billion in market cap. Tesla lost today. That is not a small number. I mean, when I was buying into Tesla stock a few years ago, that stock's entire market capitalization, for reference, was in the 30 to 40 billion range. The entire company, and they lost about $70 billion worth of market cap today. Today, okay? That's a large number. Tesla's market cap is about $685 billion right now, which still, by the way, is pricing in several years of growth for Tesla. This would be very clear. It's not like Tesla at 685 billion is like, oh my gosh, like, oh, how could it be priced at that? That's so silly. Like believe me, like we're still pricing in years and years and years and years of growth into Tesla. But I will say Tesla at 685 billion is a lot more interesting than when it was pushing up against 850 billion or so. I think it might even got a little above 850 billion at one point, okay? So that's interesting. It could get a lot more interesting in the future. Keep an eye on that one. I think that's one of the most important stocks in the entire stock market to pay attention to in terms of the vibe and the feeling around the stock market. Dropbox is easy money in my opinion. I'm just going to go out there and say it. I haven't called it easy money. This stock is easy money in the last 2 to 4 years. I saw their latest quarterly numbers. I'm fully convinced. I'm fully on the Dropbox train. Over the next 2 to 4 years, I know there's some people that don't believe in it, and I honestly really don't care. When I was buying Tesla stock back in the day, man, you want to really talk about a lot of people that didn't believe in a stock? Woo! Okay, that was on a whole other level. Like that was crazy. When I was buying into Tesla at 30, 40 billion, like that was crazy that I was buying in that stock. I got so much pushback for that. Dropbox, I don't care if some people don't believe in it. I don't care if some people don't like it. Like literally, it doesn't matter to me. That stock is easy money in my opinion over the next 2 to 4 years. And the best thing for Dropbox right now is if their stock price can stay down actually. And here's why. They just announced a $1 billion share repurchase, okay? The best thing for Dropbox, the best thing for long-term shareholders of Dropbox is that Dropbox shares could be priced really low in the short term. Why? Because if you have a $1 billion share buyback on, right? You can buy back a ton more shares for a lot cheaper prices. And that is phenomenal. And that helps out long-term EPS in a massive way. A lot bigger than a lot of folks expect. So I am perfectly fine. If that stock wants to be low over the next 6 to 12 months, that just means the run-up long-term over the next 2, 3, 4 years is going to be way more epic, okay? Bottom line with that one, okay? So what do you do now? If you're in the market, like what in the heck are you doing now? If you're on the sidelines, what the heck do you do now, okay? So if big tech companies and tech companies in general that you've been wanting to buy or buy more of continue to weaken and you love those stocks for the long term, hey, you're getting your opportunity, man. And you might continue to get your opportunity because sometimes these sell-offs, things bounce back a little bit and then they drop more. And so you get your opportunities, okay? The most important thing is to never go 100% in the market. It's not a situation you ever want to be in. You always want to have some money on the sideline. I always preach to you guys 10 to 30% on the sidelines all times, 30% if you don't see that many good deals, 10% if you're just like plowing money into the market left and right. So then you can take advantage of deals in the market. And if tech continues to weaken and you love some of those long term, buy them, okay? Also, you can deploy cash into stocks you love long term. It's something I've been doing, okay? So for instance, Dropbox, I'm looking at that stock, I'm like, deploy. Corsair, last week, I was buying that stock heavily. That stock was getting tore up. Friday specifically, I bought a ton of Corsair shares. I was like, that stock is getting very, very undervalued. And so I was buying that heavy, and if that goes back down, I'll be buying shares again, okay? TTCF, and honestly, even here, it looks like a deal and a half, okay? By the way, in regards to that one, in my personal opinion, TTCF, okay, the tattooed chef. Right now, that stock is a deal and a half. I will gladly buy more and more shares. By the way, TTCF, they actually just announced this 30 minutes ago, okay? Cash balance now approximately $200 million. They're going to be able to buy all the factories, get all the distribution that they need. They got the cash to do, just expand this business rapidly. They just reported preliminary revenue of $149 million. If I recall, that is about 76% growth year over year in terms of revenue, okay? That business has massive op long term. It's a $1.5 billion market cap. Holy Smokas tattoo chef ain't no JOKAS. If you don't know what you were doing in the market and you feel like you've gotten lucky over the past 6 to 9 months, you just threw some money around some stocks, or the past 11, 12 months, whatever, and you made some money, you better learn quick, okay? Because if you don't learn quick, you're going to miss out on a ton of opportunities because you don't really know when to take advantage of opportunities, or you're going to panic sell stocks that might have like huge long-term ops. You just if you're unconfident, you don't know what you're doing. Like, how are you going to hold in time periods where there's sell-offs and things like that? So if you want to learn from me directly, if you want to try to join the private group and apply for that, that'll be linked in the description. I also have that as a pinned comment down there. Whatever your level you're at in the stock market, we will take you to the next level. If you're a complete newbie, we will get you to a level where you're understanding a lot over the next few months. If you're like somebody in the market where you're like, I know a little bit, but I can know a lot more, we will get you to a level that is much more advanced. So hopefully you can scale your portfolio over the next 3, 5, 7 years to much, much higher levels. We've been able to do it with, pretty much almost everybody that's ever joined that program. And we're going to continue to work and continue to try to provide value there and get people to much higher levels. So hopefully I can continue to receive messages like, hey man, a couple years ago I had this much money in my name and now I have this much money, and it's usually some pretty crazy amounts. Let's just put it that way. That's what we strive for. That'll be linked down there. Don't forget to always smash. Thank you for watching and have a great day.